All right, what's up, team? It's Ruben from TGE, and in today's video, I want to talk about swing trading versus investing. I had a conversation with one of my friends who I play soccer with, and he's always curious about trading because I talked to him about trading, but he's too afraid to go into it. And he's always like he's an investor. He's like his thing is like, I could just hold it for years. This is a long term investment, but you could do both. I keep telling him you could do both, and with swing trading, you can make faster returns. Like that's the thing. I do both, and I think everybody should do both. I think you should trade and you should be an investor, right? And so that's what I want to talk about, just the difference between them. And just to kind of just to show you, like, it's possible if you're an investor and you have capital to deploy for some quick income. It's totally viable. Okay, a lot of the TG Max members are all investors. He was a long-term investor. She's a long-term investor. I mean, these are people with like a long-time investor as well. Tuan is, and so was Krishna. Like these are all people who were investors, and they learned how to swing trade, and now they're making money swing trading. Okay, so these are things that you need to pay attention to. I'm not trying to sell you on TG Max, but I just want to show you that it's possible. Okay, you can learn it from anywhere. You can learn it on the internet nowadays. All right, so let's talk about the difference. I said, ever wonder why some traders seem to grow their accounts faster than long-term investors without holding for decades? A lot of it comes down to swing trading. Okay, and so what is swing trading, right? Swing trading is all about catching short-term to medium-term moves in a stock, usually holding for a few days to a few weeks. The goal is to capture a swing in the price momentum, get in when the stock is likely to move, and then get out when it starts to slow down. Okay. It's not day trading and it's not a buy and hold investing either. It's the sweet spot in between. And so this is really important. Like just to like dissect what I just said. It's about catching short term and medium term moves. And that to us, long term is like years and years, right? Anything long term gains, which is a year plus. We're trying to capture anything from a quarter, which is 3 months, sometimes 2 months, sometimes a week. That kind of short-term trading. That's short-term trading within TG Max members. Okay, and we want to try and capture um, price momentum. Like when is a good time to get in and get out, right? Like that's what we're trying to figure out. Most of the time, well, we just use Gextron to kind of tell us like where can price go from right now to a specific date, right? That's the main goal. And like we wanted to figure out. Then Gextron will tell us, okay, this is where price can go, but here are the obstacles in the way. So just be aware, right? Because it never goes in one direction. There's always obstacles. There's always support and resistance levels, but Gextron needs to tell us like where are those levels at? Okay, we need to figure that out. So like here, this is NVIDIA. Let's just take a look at NVIDIA real quick. Um, so when you first join, or for when you first enter Gextron, let's go to NVIDIA. Okay, this is it. I have these levels already marked out. Okay, and Gextron is updating as the option flow is updating. So this is really important. So you're never like looking at like yesterday's data or a week from now. Like you're looking at the current option pricing market. So it's you're always up to date with what's relevant right now. Okay, so at the moment when we look at these bars, right? You're like, what does that mean? Like, what I don't know what this means. It's really simple. Like, all you want to figure out is when does bullish momentum begin? When does negative or when does bearish momentum begin? And where are the big bars? Okay, the big bars, the tall bars, are major key levels. Okay, and so when you're trying to figure out like where's support and resistance, Gastron will just tell you that by just look for the big bars, the tall bars, right? So in this case, it would be like 115 for NVIDIA. It would be 120. It would be 105, and this goes for both like negative and positive bars. 100, 95, right? These are tall bars. Anything that's not tall doesn't really matter. You just want to see like the anomalies that stand out, right? Even this little one right here, right? Because momentum dies and then it picks up 125, 130. Okay, now with that said, what you want to do is you want to mark these levels. I have them as AOI. So we have one. Let me see. Let me see if I have this updated. So 115 is a level. Do I have 115? No. Let's update this. Okay, that's an area of interest right here, right? 105. I think I have 105 marked. I do have it marked. Okay. Then we have the tallest, and then we have the tallest bars out of all of them. The tallest positive bar and tallest negative bar. And so what this shows you is that max pain, which is 100 right here, is the biggest support wall. Okay. It means that price may go down there, and if it does hit there, it could be the biggest support wall, so it may bounce there, likely to react, right? But these levels can also flip. They can be support and then flip to resistance if price is coming towards them, right? So it all depends on the context of where price is going. Right now, we are above max pain, which is 100. So if price was to go down here, it could stall out and then potentially bounce. Okay, but if price breaks through it, right, and it re-meets this area, it could stall out and then possibly reject, right? So these are areas where there's going to be some sort of reaction for sure. Okay, now the other thing that I have here is like I explained, like, well, when do you know that it starts from being bearish and bullish? We have something we call them P trends inside TG Max, and P trans and N trans level, right? So you'll see that here, like P trans right here was this 109 and 108. And so in Gextron, the first positive bar and all the strikes to the right have to be, they have to be, what do you call it? They have to be positive, okay? So you can't have like positive, negative, positive, like it needs to start positive and finish positive. Okay, sometimes it won't happen. Sometimes you'll see a negative bar here somewhere in the middle. But my rule of thumb is just 5 positive bars. So 109, 110, right? That's 110, 112, 113, and 114. So it meets my criteria of 5 positive bars. So P transfer for me is 109. And so I marked that level, right? And so what this tells me is like if price does for NVIDIA right now it's at 106, if it does get back to above 109, then I can start building a thesis to the upside, right? For maybe the 115, the area of interest, or this line right here. Okay, so but we are below it, right? So let's look for entrance because entrance is just as important. So right here, I said 108 because we have 108, 107, 106, 105, and 104, right? So it meets my criteria. It's the first negative bar, and everything else to the left is negative bars, right? And you can see here on the right hand side, like there's a numbers here. Okay, this is how much exposure there is per strike, but you'll see that there's a 0, right? So, and if you hover over them, you'll be able to see the value of that right here. So you just say net per strike, and you can see the value. Okay, so 108. So I have this 108 here. As far as I know, in this current scenario, Gactron is telling me that I should have a bearish sentiment at the moment. And it's really obvious too. I also tell you right here, NVIDIA is actually call dominated at the moment. Let me see. Let's refresh this. Let's see if it's changed. So it's still heavy on the calls actually. So there's still more bias on the call side. But for the short term, we are below entrance level. So it's kind of like it's a mix at the moment, right? We are, because also we must have a positive number. So we're barely positive. Actually, NVIDIA is about to make the transition. 103 is like almost skimming the line of from going positive to bearish. Okay, so if it falls down further, we'll see this call dominated, go down to put dominated. I'll highlight it there for you. But let's say I want to take a trade on NVIDIA, right? There's two options. It's really simple to take trades here. Essentially, all you want to do is go from key level to key level. So in this case, we have 105 and then entrance level. So anytime if you try to go for calls on entrance level, just know that you're going against the grain, okay? Because these are local areas that is bearish, right? Nvidia's down almost 3%. It was down lower as well too, right? A good setup would be either we take out 105 and then short it to the next level of either 102 or the 100 key level right here, or wait for price to go all the way to 108 and take another short position here around this area and then short it to 105. That's it. Key level to key level, right? Doesn't get more complicated than that. Okay. The other thing that we want to try and figure out with swing trading or with any type of trading is that you need to figure out what is an expected, like what's a realistic price target, right? You don't want to get a contract that like it goes out of the money and then it goes worthless because it's too far out. It was very unrealistic, right? So Gacktron does this really well, and it gives you the expected move by a specific date. So Nvidia, because the time is running out, right? This was actually a bigger move. I think I marked it here. I said 567. This was the weekly expected move that I marked. I updated it today, 567. Right now it's 468 right here. You can see this on the far right here, 468 for May 2nd, right? This is when the week ends for this week. And so it does take into consideration theta, okay? And it's also looking at implied volatility, right? And so all I do is grab this number and I add it with spot price whenever the snapshot was taken. And at the time, it was 102. Okay, I like to do this early in the day, and then I don't like to change it afterwards, just early in the day when the market opens. And so these are going to be targets. Right now, from open, NVIDIA is kind of flat, but it could still go to 113. It could go to 102. I think I actually might have marked this on the start of the week, actually. Okay, for weekly expected moves, I might do this actually in the start of the week. Okay, so now I have realistic price targets, and then all I gotta do is just grab some sort of expiration that's like further out, right? If that's the weekly move, then I just got to get like 2-3 months out for my own sanity, so like they doesn't destroy the premium. All right, so I said short term. So that's the short term, medium term moves. That's how we know what to target, and then also like how do we trade it? Like where's the key levels? How do I know it's bearish versus bullish, and so on, right? I said, what's the difference between swing trading and investing? Investing, you're holding for years, sometimes forever. You care about the company's fundamentals, long-term vision, and the compounding returns. And then you ride out the market dips and the corrections, right? That's investing. And in swing trading, you're holding for moves, not marriages. You care about the momentum, the catalyst, and the price patterns. I should put here like the option premiums. And you sit on the cash. You sit in cash when there's no setup, right? If your setup is not there, then you could just hold to the cash. You don't have to trade, right? And I said the reason why swing trading can be better is because it's faster compounding. So swing trading gives you entry exit cycles, which gives you more chances to grow instead of waiting for 10 years. You have more control, but you're not just buying and hoping, right? Because things can flop like SMCI. They had a whole scandal, and if I was an SMCI investor and then all of a sudden it just flopped, right? You can sidestep bear markets, and you can target stronger setups, not weak ones. Cash is a position, so you don't have to trade all the time, right? And then your risk is defined. And what I mean by that is that you'll have a stop loss strategy, right? So for example, like if I'm shorting Nvidia and it reaches this entrance level, and I take a position here for some downside, if it loses entrance, then I could just get out. That's a stop loss strategy. Unlike investing, you just kind of hold through the, like if Nvidia was to reach 100 and it loses it, you're probably just gonna hold it, and you're gonna have to find another dip, or maybe you'll just hold it all the way through, right? I said, but it's not for everyone. Swing trading takes discipline. It requires a repeatable edge, so you need a trading strategy for Short-term trading, you need a strategy for long-term, for like hyper bullish markets, volatile markets. They're very different environments, so you need to have a strategy for each one. Even for chop days, like you need a strategy for that. You can actually make money through theta. Uh, Emotional control, because with trading options, you could definitely lose your money a lot faster. At least what you're risking, okay? But you're not supposed to risk a whole lot. Tools to track and set up exits. It's a lot more diversified, in my opinion, because if you're just investing, you're just like, you have one bias, and that's long term. But with trading, you can be short, you could be bullish, you can take advantage of the chop, of the sideways action, and so on. And how Gextron helps you. I think I already just talked about that. So, in summary, swing trading is short term opportunity, investing is a long term patience. Swing trading gives you faster results, more control, defined risk, and flexibility. Okay, that's the important part. So, you're not holding through all these major market crashes. You can make money both ways. It's and then also you can, if you have long term investment, you could use swing trading to make capital and then reinvest in your long-term investments, right? That's a strategy as well too. But if you're just like investing and then holding through the crashes, good luck. All right, this video went a little bit too long. That's it for now. I hope that was helpful. If you want to try Gextron, if you want to test out the tool, there's a 7-day free trial. I'll put a link in the description box. And if you are looking for help in trading, I'll put a link in there too for you to join TG. All right, I'll see you guys in the next one.